so much for that introduction. I definitely believe that this panel is going to be one of the ones that's most anticipated from everything that's going on. You know, I think not only in the crypto world, but from a macro side, things are moving so quickly. I don't know if all of you are following what's been happening with Credit Suisse and UBS and the likes, but it's quite insane coming from Switzerland to see that actually happen. And then everything else with Silicon Valley Bank, USDC depegging, and I think we can just kind of go on and on and on with regards to what's happening. So talking today about the future of payments seems so relevant. So let's do a little bit of that. Maybe before we kind of get into it, we can do a little bit round of intros, and please, maybe you can start first.
Is this working? Yeah. Hi, I'm Old, CEO of NextPay. What we do, we're a go-to B2B payments provider for digital businesses out of Europe, and yeah, also providing crypto OTC for our clients. So basically ensuring that companies in the space already or looking to enter the space have proper banking and payments infrastructure.
Hi, so my name is Reese Murray. I'm one of the senior directors here at Ripple, based out of Dubai. And Ripple, what we do is we look how we can utilize crypto and blockchain solutions to really advance enterprise payments from a cross-border payment perspective. Been in existence for 10 years now, so certainly well-versed here. And we have built a network called RippleNet, which currently transacts billions of transactions in billions of dollars worth of value utilizing digital assets. Thank you.
Hi, I'm Ankur. I'm one of the co-founders and CSO at Zoksh. We are a crypto payments company. So what we have done is we have created a completely decentralized, non-custodial crypto payment gateway, and we have aggregated like 14 blockchains. So the idea is to make crypto payments adoption simpler and easier for businesses. So with Zoksh, like in 15 minutes, you can accept payments across 14 blockchains. Additionally, what we have done is for Web3 businesses, we have partnered with some of the major on-ramp and off-ramp players, and we also provide these on-ramp services for Web3 businesses.
Hi everyone, I'm Ash Sharma. So I lead crypto partnerships at Checkout globally. Checkout, we're a global fiat on-ramp and off-ramp for the crypto industry. What that means is we're an acquirer, we're a pay-to-card solution provider, so when people want to off-ramp onto Visa, MasterCard credentials, we're also a card issuer. We have obviously a left and a right side to our business, so we obviously help process for likes of Deliveroo's, Netflix on one side, but then we also have a dedicated crypto business, so roughly the last 5 to 6 years, 50 to 60% of on-ramp has been through us and the clients that we power in the industry, which are exchanges, on-ramps and off-ramps, key gateways, NFT marketplaces, play-to-earn spaces as well.
Fantastic, thank you so much. And so let's kick this off a little bit, starting actually from the macro, and then we'll go a little bit more granular, right? Because there is so much that is happening. I'd love to be able to discuss a little bit more kind of from the commercial bank side, everything that's happening, from the central bank side of things with interest rates, inflation, is that all under control? Being able to also understand the whole kind of macro sphere from the innovations happening, stable coins. There was a lot of trust that was put, for example, in Circle and other players. I mean, how are your respective solutions? Because of course we have quite a diverse range of actors here, service providers, solutions, actual products, etc. I mean, maybe Uz, you can start us out and tell us a little bit how you've been impacted by the macro sphere around what's going on and the solution that you're providing to it.
Well, that was a very wide question. I think we should narrow it down a bit. And one thing that people will start worrying about is credit risk. I think that before things happened in the recent weeks, at least for 10 years or more, companies and people were not conscious enough of credit risk and didn't try to understand the counterparties that they're dealing with, the service provider, how do they deal with their money. And this goes for banks, this goes for fintech companies, this goes for crypto exchanges, this goes for stablecoin issuers. What is under the hood? There's always some people who have cared and rang some alarms, and but the general population, as long as it's a convenient service, didn't really worry about it. I think at the end of the day, when it comes to holding cash and making cash payments, people just want that their money is safe, that it's moving fast, and there's no issues there, right? I think crypto solves a lot in the moving fast and safe part. However, in the keeping safe, I think it's where the issues lie, because even in highly regulated banking, we can see that keeping funds safe is not so easy as regulated banks can go down. But when it comes to new areas which don't have clear regulation, then there's a lot of dependent on the issuers of coins or centralized exchanges, and whatever their internal risk management policies are that are not really regulated by anything, kind of self-regulated. And when you manage a lot of people's money, then clearly there's a lot of business and profit-making opportunities that there are, and I think it's just natural incentives for people to try and make those profit opportunities. So that's where the regulation, the buzzword of this industry for forever, has to come in, because the safeguarding is paramount, so that people know that if they haven't invested in anything speculative, they haven't bought any bonds or whatever, they just have cash, then that cash is there 100%.
Yeah, thank you. And maybe if we bounce on what you said before, kind of deep diving into the regulation side, Reese, I mean, is this the moment that Ripple has been waiting for? Safe, secure, fast. I mean, this has been your premise now, dating back many years. I mean, was this the moment you were waiting for mass adoption?
Look, I think, if we zoom out slightly and we just look at it from a perspective of global payments, moving funds cross-border, which is certainly the use case we're focusing on here. The infrastructure we're currently running on is decades old, right? It's very slow to move money. It's very costly. There's no certainty. And I think something like 6% of global payments actually fail, which this does not serve the needs of the people today who, want things at the click of a button and instantaneously. I can send an email to anyone in this room, and within a couple of seconds, you're going to receive that email. So moving information is very quick. Moving value, it kind of goes into a black hole in the current banking and infrastructure system from that perspective. So to your point, is this what we've been looking for? Absolutely. We want to certainly use crypto and blockchain, have a safe, secure, regulated environment for people to benefit, and they really can. And we're seeing that from our product on-demand liquidity, where corporates and PSPs are moving billions of dollars of value without the friction points that we currently see in the global banking infrastructure.
Yeah, fantastic. And maybe to jump on that as well, I mean, Ankur, is your inbox full at the moment? I mean, with everything that's going on, I mean, how are you telling your clients and partners to navigate the current macro economy?
Actually, this did actually send a jolt through the industry, and obviously we did get a lot of calls from a lot of our customers. But there are like two sides of it. One, it kind of validates what the crypto industry has been talking about for a very long time. But at the same time, the close ties to the banking system and the current dependency on the banking system, and the way most of the regulations are framed. So everything that existed was kind of imposed on this market, wherever it exists, and majority of the markets are not even regulated. So this kind of shows why that is needed, to bring trust in it, because the tech is there, the framework is there, but the industry and the regulations kind of need to be there. And that's exactly what we have been telling our customers, and what we have been talking to regulators and the stakeholders as well.
Oh, fantastic. And here, Avishka, I know that checkout.com is a giant, right? And if you look at kind of the ability to be versatile in moving markets, were you guys able to predict a little bit of what's going on? Have you been able to adapt to it? I mean, tell me more about, yeah, how you've been approaching the situation.
I mean, Shiraz, I'm bolding through this last cycle, if I'm honest. It's a good question. I think Aldous, Reese, and Ankur touched on two really cool ways to look at it. From our perspective, we look at it in two ways, the B2C side and the B2B side. So let's take the B2C side for a second. Yeah, 800 billion bear market. What's recently happened with the instability in the US that Aldous mentioned, and you know, what are consumers going to behave with? Because I see consumers buying into crypto using exchanges, on-ramp solutions that everyone has here. We've seen that demand increase recently over the last couple of months, and now I think the consumer market's now come back up to the trillion mark. So for crypto as an asset, consumers are flocking to it, and then they're looking for alternative investment, you know, rails. So that's one component that we're seeing around the volume increase. I think that's where the ability for us to provide optionality for consumers is key. So for me to be able to let consumers on-ramp with Google Pay or Apple Pay is going to help polarize this industry and help it grow more effectively. So that's one aspect of the B2C side we're seeing. On the B2B side, Reese kind of touched on it as well. I settle the money that consumers buy to the exchanges, like Crypto.com, like a Binance, like Ankur, and some of the other on-ramps and off-ramps. And and Reese kind of highlighted, there's a latency issue at the moment. You know, by the time I can give my money to these merchants, it can take 5 or 6 days. You know, the merchants then running a working capital kind of deficit. So assets like stablecoins or different rails like XRP can be very interesting for the future. You know, we launched a stablecoin settlement product for crypto merchants last year, and with Fireblocks, we processed over 2 billion. So there's quite a lot of demand for people to receive a balance of fiat and crypto assets. So I think that the solution that crypto on blockchain is providing is definitely streamlining a lot of the inefficiencies in the banking system today. So that thematic is growing from us from outside. And I think just, you know, I won't harp too much on regulation, but I certainly think, you know, with Europe and the opportunity that Europe offers, given the instability in the US, and given that MiCA regulations coming out in Europe, it's very clear, you know, how it's going to be regulated, what it means for stablecoins, what it means for some of the other digital asset tokens, and I think that's going to help grow demand. And obviously, as we've alluded to earlier, VARA and them being more forward, both two massive economies globally with high, you know, mobile adoption, digital payment usage. So we're going to see a lot of enablement through more clarity in the regulation.
Yeah, thank you. And let's jump on that topic of the regulatory opportunities and challenges now, one of Uldis's favorites from what I've heard. And so maybe you can give us a little bit more context here. You know, we are in Dubai. I think when we're in these panels, we don't often talk about the context of the local jurisdiction that we're in, right? I mean, there's a reason that all of you here today and all of you in the room are in Dubai and maybe not, for example, be it in Switzerland, be it in New York and other places. I mean, maybe you can tell us a little bit more about, why you're here today in Dubai and your thoughts about the opportunities that Dubai offers.
Well, I think companies that are agile and innovative are running around the world finding the best places to do business, right? And I think that Dubai has really worked on a focused manner to get itself on this map. And I think there's some challenges here as well. For example, working with companies out of here in Europe is challenging because of the FATF gray list and reasons like that. So I think it's also, you know, a bit of a global race between jurisdictions, and it's not clear how much is, you know, very political and how much is professionally driven. So I think that whichever, in Europe it will be very interesting to see what's going to happen with the adoption of MiCA regulation, because it will a bit end the quasi wild west that has happened in Europe so far, that everyone has its own rules, maybe somebody has no rules, and then okay, we do some kind of KYC, that means that we're compliant, and you know, whatever happens on the actual financial services, not just the AML side, is, you know, up to everybody to self-regulate. And as that is going to be passportable, then obviously these licenses will become very highly sought of, like the EMI license has been so far. and then the best jurisdiction that will offer the most favorable terms will be able to get all of the business, because they will just get all the companies that will passport throughout the Europe. So there's going to be very interesting things happening, and I really hope that they're going to pay a significant attention to the thing that I mentioned before in terms of safeguarding of customer funds.
Yeah, so very, very important. And I mean, I want to touch on one subject where a lot of the world follows the US. And Reese, I know that you were UK based before coming to Dubai, but of course Ripple has had a lot of exposure within the US and American markets. And I feel like out of all our panelists here, you're probably the best seated to be able to speak about this. Can you give us a little bit of thoughts around kind of, let's say, US regulatory kind of framework, Ripple's kind of positioning around it a little bit? Yeah.
Yeah, look, I think from a Ripple perspective, first and foremost, we believe it's critical to be meeting, sitting, talking, educating, and most of all, listening to regulators in geographies globally. And really if we look at the US, that's something that we have looked to do, have battled with. So we're very interested from, I guess, a global business to build our business in geographies where there are more accommodating regulators, like Dubai, Singapore, Hong Kong, UK, Europe, which is one of the reasons why I'm sitting here and based out of Dubai, first and foremost. But look, I think the biggest problem that businesses face in certain jurisdictions where there isn't clear guidance, there isn't rules for everyone to abide by, essentially doesn't foster innovation. It actually causes businesses who may be based in the US and other jurisdictions where this is taking place to look at where they want to be building, look at where they want to be actually building their business. And I think that's where the US have really lacked in actually creating a clear framework for crypto businesses to build on. They've gone the opposite way, where they are, by enforcement, trying to make the rules, but still not giving any concrete guidance. So that is something that we have certainly struggled with, but as a result, we have benefited globally in terms of building out outside of the US.
Yeah, thank you. And I think recently you've really covered a lot of the regulatory side. I don't know if Ankur, Ishka, you have anything to comment on that side additionally at all to what the guys have said?
No, I think they covered it all.
Yeah? Yeah.
No, I think they've covered it.
It's rather covered.
Yeah,
I mean,
I think one point that has to be said, there's one very good example of bad regulation is what the US did to Kraken on staking. So that's what Reese just mentioned. Regulation by enforcement instead of understanding, instead of discussing, instead of preparing some kind of framework, you just go and ruin a perfectly good product. So I think that's a very, very good bad example.
yeah.
I will say globally though, regulators have definitely got a bit better. Like they've got a clear taxonomy, so they're not talking about different things. Now they've kind of been able to identify the components. I think one of the things they have to take into account, which we've seen in the US, is the impact to the services that help crypto businesses become crypto businesses. So, for us, we're a fiat regulated institution. There's banking services, all is mentioned, the type of KYC and whether it's retail or whether it's a KYB on a crypto company. There's service providers in each of these jurisdictions that touch crypto, that help these crypto businesses come to life. Reese mentioned the cost of innovation. And if those industries aren't equally as regulated, we've seen the byproduct of SVB, that's where we're going to have to probably see the regulators expand globally, a little bit more of their purview of outside of just the blockchain industry and who's going to help us build this industry up.
Yeah, no, thanks a lot for that point. And of course, I need to chip in the Swiss perspective and say that slow and steady does win the race.
Yeah.
And it is really great to kind of have a certain understanding, okay, what is the foundational layer here, try to educate, as you mentioned, Reese, and then kind of build on top of it. And so, of course, Web3 revolves a lot around the community side, and of course here, Ishka, you head the crypto partnerships at checkout.com. Maybe you can give us some perspective on the importance of partnerships in this space, building together, that philosophy of, the rising tide lifts all boats. I mean, how does that kind of really fit within the ethos of checkout.com?
It's huge for us. We help the merchants and the solutions and the money move, but I also have the team that just looks after everyone that helps a business go live, kind of to my earlier point. So we have partnerships with on-chain analytic providers like TRM, Chainalysis, fraud detection tools like SIFT, Sardine. You know, we help partner with banks. So you've got Banking Circle in Europe that's helping step in on USD flows for customers that are impacted. For me, we're taking it on ourselves, as Reese mentioned, to educate the ecosystem, and like Audis and Anchor have businesses, help them pair up with crypto-friendly providers. And I think we need to take ownership, given our business helps the on-ramp and off-ramp of our ecosystem. So, you know, we have multiple categories. We also have legal firms that help businesses go live in different jurisdictions. I'm sure Audis and Anchor get very into the nitty-gritty with their GCs, but just having someone that knows how to orient, right? Is it better in Europe to be regulated, Lithuania, Czech Republic? Depends on your customer base and user base. So for me, engaging with these law firms and being able to give it to founders and institutions that want to launch a solution, it's kind of helping speed to market, and it benefits us as well. Don't get me wrong, we're not going to benefit from the volume, but I'm going to benefit from bringing this fiat community to the crypto community in a traditional sense.
Yeah, fantastic. And Ankur, do you want to jump on that?
Sure. So actually, Checkout is, like he just mentioned, a partner to everyone. Actually, anybody who, if anybody has ever converted fiat to crypto, you always hit their gateway. They are always there behind the scenes supporting everyone. So we are also like in a partnership with Checkout just for that. So when we started building our on-ramp, the challenge was, again, getting all these pieces together and making it work. So the complexities of it and the boundaries of it, because we were regulated in Europe, but we could not really touch other geographies. So what worked out better for us was partnering with all the major on-ramps out there, rather than building our own. So now with the Zox ramp, what we could do, just because the entire community came together and we built it with them, that we can provide the best rates and we can provide the best coverage. So payment methods like UPI and credit cards and bank transfers, they're all supported across geographies, across currencies, because we support multiple ramps and we didn't really focus on building our own thing in a silo. So obviously that is like a definite thing that the entire industry needs to look at and work on.
Okay, yeah, thank you. And a lot around partnerships and community is the Web3 space, kind of connecting with Web2, connecting with Web1. And Reese, we all know that Ripple has quite good connections with, let's say, the larger traditional financial world. Maybe you can provide some perspective to our audience here, how they can navigate some partnerships with that world, the traditional industries. How can they go about it, connecting further with them?
So, I mean, we commissioned a report last year, which basically the data was that 76% of global FIs will have crypto incorporated into their offering within the next 3 years, right? Now, I joined Ripple 5 years ago, and these same banks, when we were having meetings with them, you know, if you mentioned the word crypto, people used to get pretty nervous, right? You know, you look to are they calling securities to kind of escort me off the premises? And you come forward a few years and you see the same banks, the same people who are looking to learn and looking to understand how they can incorporate this technology, this you know, game-changing technology into their offering. And the only way for them to really do that is through partnerships. The only way for them to do is to leverage the crypto-native businesses that are building all the pipes and be able to, it's difficult to incorporate into legacy systems that banks have, but that's the only route to them actually enabling. Otherwise, they're going to get completely left behind, and that's the reality that we're seeing at the moment.
Yeah, fantastic. And maybe we transition, as we're slowly but surely coming to the end here, into this kind of the financial inclusion part and how partnerships can help there. I mean, how do you see kind of mass adoption being able to be grown through partnerships, through Web3? I mean, do you see this as being something that is happening more and more, or how do you see mass adoption?
I think there's different ways how to look at financial inclusion, and the region where I'm from, which is Europe, maybe doesn't have problems with financial inclusion in the most traditional sense of the word, as it's seen globally in places like Africa, for example. But what I think when I see the financial inclusion matter is the financial inclusion of modern businesses, the financial inclusion of consumers that are willing to consume these products. And I think there has been a growing trend of financial exclusion happening in Europe. And I believe that the whole reason why the crypto and the fintech industry exists is basically two main reasons. One is disruption in terms of quality, speed and modernism of the service. And second is access to this kind of system because the legacy system, is pushing more and more businesses out of it. So I think that crypto plays a very vital role bringing them back in. We have been going around different industry events, not just crypto. We've been to some Forex events, to some gaming events, companies that have nothing to do with crypto at their core. And on stage, half of the time they talk about USDT and how crypto can help them run their businesses and how can they be enabled. So yeah, maybe a bit of an alternative view on financial inclusion.
No, but it's a great one. And Reese, if we continue on with yourself, Ripple is to some extent building that financial, like the new financial rails, right? I mean, how are you seeing inclusion, mass adoption throughout the world in areas such as Latin America, Africa, wider Asia, etc.? How is Ripple kind of supporting in the adoption there?
Yeah, I think our initial use case was remittance, right? And we launched with Philippines and Mexico as two very large remittance corridors where there is a ton of friction. Mm-hmm. So often what you find is that the beneficiaries or the people on the receiving end of these kind of very small, dollar amounts are the ones that need it the most. But they're having to wait 3 days. It's going via an intermediary bank where $20 is taken out for the privilege. So from our Ripple perspective, that's why we focused on the remittance space, because we saw from a speed, cost, and also certainty of the payment being delivered, that offered the most value to the consumers and the receivers of those funds. Another thing, and we've recently partnered with a payment provider called MFS Africa. And one thing that we need to talk about is that actually getting the funds just into Africa, the first leg of the payment, is often the hardest thing. That can take 3 or 4 days. So yes, huge mobile wallet adoption there, but there's still maybe a 2-3 delay for actual dollars to be received in Africa before they can be dispersed to those wallets. So they're going to be utilizing XRP as a bridging asset to actually get funds instantly delivered into Africa. And again, that's the focus. We're looking to see how the end consumer can benefit the most there.
Thank you. And as we are really coming to an end here, and I still want to get 1 or 2 questions from the audience, maybe Ankur and Ushka, you can give us like a 20, 30 seconds kind of future payments conclusion. What do you believe?
So obviously the future payments inclusion blockchain is definitely making that easier. And when we look at like the availability and the accessibility of it, just in India, more people hold cryptocurrencies than stocks. And those have been around for such a long time. And it's not a small number, like 40% more people own cryptocurrencies in India than stocks, and just in the last few years. So the moment the regulatory hurdles are lifted, we are there. That is going to happen. It's going to grow real crazy.
Thank you.
I'd just say optionality is super key here. Whether it's any on-ramping rail or whether it's off-ramping rail, in particular in the inclusion use case, CBDC, stable coins, or any other digital asset, we're giving it to users quicker, and we're solving for latency in the current B2B banking ecosystem. And if a user can have optionality to receive the funds quicker, it's cheaper for governments. They're going to spend it more. We're going to grow crypto usage, and we're also going to grow better benefits and efficiencies in this whole system that's kind of fractured with latency today.
Wonderful. Sounds beautiful. Thank you for that. Maybe we have time for 1 quick question. I don't know if there's a microphone going around, and if anyone does have a question for esteemed panelists here today. Quick raise of hands. We have someone with a question way back in the end.
In the meantime, quickly comment. Did you see somebody put on Twitter this screenshot of like more than 10 checkout options, and was kind of upset about it? But I was like, I don't think there's anything bad about it. You can. I found it more funny that there was this tipping with the firm option. So tip now, pay later. So for Uber or something like that. Sorry, your question.
Yeah, go ahead. Whoever has the microphone. I think there were two questions. Yeah, go ahead.
Hi, my name is Varun. I'm the founder of blockchainlawyer.in from India. Since morning, we've been talking about regulations. My question is for NextPay, especially when you look at the European ecosystem. We have been seeing countries like Estonia and Malta offering banking solutions to crypto businesses. Now, of course, Portugal coming up with more favorable laws, and NextPay, of course, contributing to the ecosystem as well. However, I feel that when we talk about decentralization, the biggest challenge would be not to have country-specific regulations. Do you think that, let's say, Europe tying up with what is happening here in Dubai is more relevant, because you might have, let's say, some validator nodes sitting in Thailand or Philippines or India, and the company might be in Dubai. So while we talk about regulations, Dubai talking about its own regulations, VARA coming up, India talking about its own things, Singapore coming up with other things, Wyoming in US coming up with other things. However, do you think that there is a need for centralization in this decentralized world to talk about singular authority or maybe contributions by different industries or countries, so that we have, like, say, remote employees, multiple people sitting in different locations of the world? So while Dubai is at the forefront, do you think that centralization of decentralized entities, centralized regulation for decentralized countries is the need for the hour?
Okay, that's a tongue twister. Yeah, I think that European Union has proven how hard it is to unify things, right? We agree, but hate each other. I think there's so much ambitions around the world about who's the fastest, who's the smartest, who's the most innovative, that to get to some kind of global order. I mean, there is some form of, the fiat currency system is some form of global order. But when we talk about details, even companies like MasterCard have a license for each and every region, right? They could be doing it more centralized, but they can't. So even if these global corporations have to be broken down into these sub licenses and things like that, I am very skeptical that there can be some kind of overruling. Or it is done by code, as in Bitcoin. So it's enforcement by math. So then there's no ambition, then there's no show of strength. There's just math.
I'd say there's technology as well. So you touched a point around decentralization. So with account abstraction, we're bringing in fiat solutions with custodial, non-custodial wallet solutions. So I think, as you mentioned, Visa and MasterCard looking at account abstraction, letting users leverage what crypto assets they have in their custodial, non-custodial wallets. Companies like Ledger, Trezor, giving consumers access to cold storage. And then us as payment ecosystem bridging that means technically we don't need to let the regulators overcomplicate themselves. We can solve it with technology, we can solve it with existing fiat rails and regulation, and we can create a user flow that still leverages the DeFi kind of use case as well for Web3 and ownership of your identity and your assets.
Yeah, no, thank you for that answer, and I think it was a great question as well. A bit of an oxymoron, decentralization within centralization, but you can do so as well through standards like the ISO standard for security, etc. But yeah, great conversation. Thank you all, and see you soon. Thank you.